Welcome, everybody. Welcome to our Ask Joe call. A popular question that came in from Don. Don says, can you be approved for a line of credit without revenue? So this question actually came in kind of twice. I'm going to tie it in with Chantel's question, which is, how do I answer the question of how much revenue is your business generating on the application when I'm only generating W-2 income? I've had a hard time finding applications that ask for stated income in reference to future earnings. Also, how do I get past the requirements for bank statements showing deposits if I'm not generating business income? So the answer is that you need to find the banks that are startup friendly. And there's different ways to do that. Even Chase, for example, is doing a credit limit increase where we're doing a credit limit increase and they're doing it as a no doc, meaning no documentation is required for a credit limit increase, soft pull. It's based on stated income and projections for the next year. So even large banks like Chase sometimes will allow that. But the easiest thing to do is to find in your state the top SBA lending banks and then start calling those banks. Because about 90%, 80 to 90% of banks are going to require full financials, tax returns, all that stuff. And so where we make our money and get our funding is in that 10%, right? It's just like I eat a lot of brisket. I love barbecue food, and that's a hard thing to make. 8 out of 10 briskets are just okay, but 2 out of 10 are freaking delicious, like ridiculous. Those are the law of large numbers, right? So not every bank, in fact, majority of banks are going to require a lot of financials. So what we teach here at Business Credit Workshop is to do backyard banking. Backyard banking is the act of working with the top small business friendly lending banks in your community. And these are local community banks. These are credit unions that allow you to make projections of your revenue or allow you to do stated income. One of the things that you should do is create a business plan. So you could use something like ChatGPT, for example. You could use AI and say, help me create a new business plan. My company, you don't even have to type things correctly anymore, right? ABC Marketing, and we are a digital marketing company. Ask me questions first. Now, let's shoot that over and see what happens. So now what will happen is using AI, you used to have to pay like a couple $100 to get a business plan. Now you can just do it for free. All right, what's the core vision of your company? What do you offer? What's your target market? What's your edge sales and marketing strategy? So for me, our vision is to help small business owners and startups obtain funding so they could grow and scale their businesses. And in many cases, leave their 9 to 5 jobs and obtain freedom. Services and offers, we offer e-course, digital memberships, and coaching and things like that to support people that need information and resources and lists of banks like the funding database to help them grow and scale their company. I've trained ChatGPT so well, I could make it answer these 8 questions for me. But target market, a lot of real estate investors, a lot of small business owners and startups, any company that's looking to expand that's on the brink of growing, but maybe they don't have the money for advertising, but they have a proven model. Anyway, so you answer these questions and then you enter it in, and then ChatGPT will create a business plan for you. So it's a two-part answer, right? Can you be approved for a line of credit without revenue? So the answer to Don's question is yes. And then the next question from Chantel is, well, how do I say how much revenue I'm generating? You actually tell the truth. You don't have to be sneaky or anything. You just talk it out with the bank. So you call one of these banks, and for example, TD Bank will let you get up to a $25,000 business line of credit, even if you are a startup and you have no revenue. So you're not hiding the fact that you don't have revenue. You are finding the banks, those 5-10% banks, the good brisket banks, right? Those backyard banks that are hard to find, but they are the ones that offer the no doc unsecured business lines of credit and are startup friendly. And many of them will allow you to and expect you to project your revenue. So those are the banks that we need to find. So as far as getting asked before bank statements and showing deposits, generally I'm not working with those banks. I'm skipping them. And what I will do though is before I got my line of credit from M&T Bank and before I got the line of credit from Fulton Bank and these banks, these are real stories by the way. Before I got funding from TD Bank, I opened a business checking account with them. I made a couple of deposits I never did the big deposit thing. I know students have done that. They move hundreds of thousands of dollars, and that's great. I put $100 in the account, and that's it. $100, and then a week later, maybe I'll make another $100 deposit. But I'm just trying to develop rapport and kind of get in the system. I know that when I'm a customer of the bank, they treat me so much different than when I'm a non-customer. So backyard banking is working with the top local community banks, credit unions in your backyard that are startup friendly, but also opening the account with them first so that you have rapport with them. That way you have someone to talk to at the bank that can help advocate for your approval. And it works. And this is how you get past a lot of the challenges that people are having, like the top two questions of today's Ask Joe call, which is, what do I do if I have no revenue? Where is the list with the 10% banks? Because I do have business plans. Sean just asks that. So you have two, my brain goes in two different directions on that. I sell a list called the funding database, and it's $7. That's a steal, right? You can buy it, right? You can just purchase the list, or you can, I just showed you how to do it yourself for free. So if you want all 50 states, you can just buy it for $7. I put the link in the Zoom chat. Or if you want to just do it yourself, just follow along with what I just covered, and then that way you could use your business plan to find these banks. So great question. All right, so the next question, and you guys can ask questions here live. I'm also going to the list of pre-submitted questions. Yeah, you probably bought it already. Yeah. So if you ever want to know, well, I'll show you a trick, right? So if you ever need to know how to log in this stuff, just scroll at the bottom of where you could buy it. And I always put in the login link there. I wish every digital marketing company did that, but they don't. It's so annoying. But just click on login at the bottom, and then you can log in, and it'll let us log in here. And then I'm going to click on funding database. Here it is. And then start here, and that's where the databases are. And it's this one right here. Wasn't that list like $2,000 before? No, this is brand new. I created it this year, and it's 446 backyard banks that are the top lending banks. So I took the data from here, which probably took us a couple minutes each, maybe a little longer, right? A few minutes each. But then I did it 50 times. And so I'm saving you a couple hours of work for $7. So to me, that's a good deal. Now, the list you might be talking about, David, is when I interviewed the banks. That took me a year, right? So if you want to buy the list of like where I interviewed each one, you would join coaching, and it includes that list. Yeah. But when you buy the funding database, we do give you the scripts on what to say and and you already know these are the top lending banks. You just need to call them up. It just depends on like what level you're at. I can wash my own car. I could pay someone to do it for me. Yeah, it is a good deal. Thank you. Thank you. All right. So the next question comes from Reginald. Reginald says the process of aligning your LLC with a credit partner when you're credit challenged. Sir, you ask a great question, so let's go ahead and jump through. The very short answer, and then I'll give you the long answer. So the short answer is just create an operating agreement. Give the majority ownership of your business to your credit partner, 85 or 90%, and now you have the minority interest. The bank, when they pull the credit of the business and of the partner, won't pull your credit because you own less than 20% of the business. That's the short answer. And how do you get an operating agreement? Same way you get the business plan. You could go online, you could use a service, or I would just use ChatGPT. Okay. This does not replace legal advice or accounting advice. I still have to recommend, and I do recommend that you talk with a CPA and a tax qualified professional and an attorney before proceeding, especially with credit partners, because you don't want to run into a situation where you kind of like winged it with your documents, and now your credit partner is suing you because you failed to pay the bills or something, and now everyone's mad at each other, and etc. However, I also believe in being resourceful. So you do what works for you in your business. But this is paperwork that you should use when using a credit partner. Number one, credit partner agreement. This explains your relationship, what you're doing, like applying for credit lines, and each role. Like my credit partner is the chief financial officer, and I am the whatever I am, the member or the manager. Who's going to pay what, and then how are you guys protecting each other? In a perfect world, a credit partner would be like how I did it, and just it is what it is, right? So I had a family friend who wanted to learn real estate investing, and I had a credit score in the 600s, and she had credit score in the sevens, and we ended up getting it close to 8. It was like mid sevens. So I said, hey, be my credit partner. I'll split the first 3 deals we do together, and you get paid and you learn how to do real estate investing. That's what's in it for you. And then WIFM, everyone's favorite radio station. What's in it for me? What's in it for me is I get a credit partner with awesome credit. And when we do a application, at the top of the application is going to be my business information. And then that's it. And then the bottom of the application is going to be your information. So I gave them 95% ownership of the business. This is their income. Their title is Chief Financial Officer, and we got $100,000 in business credit. This approval was 15,000 from Provident Bank in New Jersey. So we got $15,000 from one backyard bank. It's in the business name. It's personally guaranteed by my credit partner. We are both on the hook for the debt. Now, the way I do the agreement is I'll pay the bills, obviously. And if something goes wrong, I'm on the hook. It's not just you, it's not just the business. I got you covered, right? You have to do that. And that's why if it goes bad, there could be lawsuits, there could be trouble. I hope it doesn't get to that. In American business, some things go great, sometimes it doesn't. What we did is we got a handful of these, 100 grand worth, transferred my debt from me to my business. Great. Now my credit scores went through the roof. My credit utilization went way down to like 1, 2%, that sweet spot. How did I convince her? I offered her 50% of the first 3 deals we did. So they made tens of thousands of dollars by doing this. They were my partner on real estate deals. Did you already have credibility? I was just starting out. I was telling people what I'm doing. I was going to real estate networking events. I was getting on stage and teaching some processes that I learned. I always tell people when you join a real estate investment club or a networking event, even if you're brand new, you still can go out there and talk and share and make an announcement or go on stage. And when you're teaching something to someone, you just need to know a little bit more than they do. You do not have to be the expert. It's a huge misconception. I remember Les Brown was explaining this in one of his videos. You just need to know more than the person listening to you. So if I know putting bandit signs out around certain towns gets me 5, 6, 700 calls per month, that's what I could show people. I could teach you that. It doesn't mean I know everything about everything, right? It doesn't mean I've done 1,000 deals, but who cares? Like, do you always want to wait for the guru to come around, or do you want to see one technique Joe used to get his phone to ring off the hook? And that was one of my early presentations. That's it. Now I'm like a mini celebrity. And I did not want to talk publicly. I never thought I would do this, by the way. Right, we're on Zoom. I got a really nice microphone here and all that. I always told people I'll never do public speaking. I don't want to do this. It sucks. But I forced myself to do it. Just like pull-ups in January, I could barely do one. Now I'm up to like 8 or 9. I love finding things I suck at and then becoming very good at it. It's a great development skill to never lose. And so I hope to be doing that even when I'm 80, 90 years old, is to never lose that grit. All right, so anyway, so that's the answer, Corey. This is the application. We have on the very top of it, business information, the very bottom of it, personal guarantor information. We're only paying the minimum payment. If it's $15,000 and Provident, you could check if you want, they might have 0%. And if you're only paying 1% of your balance each month, $150. So yes, I had the 150 of the cash to support the repayment. You're talking about a very small repayment, minimum payment. And then when you close the deals, pay off the debt. Get the credit partner off the hook for the debt, transition the obligation to you, and now she is off the hook. I'm on the hook, but I've just boosted my credit score crazy high. And now I have a partner that I could do other deals with because I made good on it. So that's the question came from Reginald, the process of aligning your LLC with a credit partner when you're credit challenged. That's the story behind the process. As far as the nitty gritty, you want to have a credit partner agreement, an operating agreement, conversation, ideally with an attorney for the both of you to be protected. Indemnification clause, protecting the partner if something goes wrong. Should have some language there protecting you if something goes wrong. Even if it's your sister, your mom, your spouse, you still need to have this stuff. You're running a business here. Even if you're running a charity, you still got to do this. You get it? Doesn't matter if it's your own brother. Have stuff in writing, because 2 years from now, you both are going to forget what the heck you agreed to, or you're going to remember your own version of it. And they could go back and say, oh, wait, hold on. This is what we agreed to. This is very good. I call it a PG disclosure. It's just crystal clear that they know they're guaranteeing the debt and that they're signing their own applications. Do not sign for your credit partner. A communication log might be overkill. I know if I was a lawyer, I'd say go for it. But just keeping stuff transparent. If you can be honest and upfront, people like that. But make sure there's something in it for them. That way they actually have any interest in doing it. Stephanie asked the next question is, how do I use a cosigner to fund my business loan? It was the same answer. When you do it, just keep in mind, it's easier to do this with business credit cards than loans. Loans and lines of credit, you can use credit partners, but it's a lot harder for the paperwork. So I would just stick to business credit cards. Okay, question says, how's Provident now? If you hate the managers, switch locations. Yeah, different locations, different states. It doesn't have to be in your state always, thanks to foreign entity filings. Great tip on knowing a little more than someone. Yeah, Sarah says, is the credit partner playbook document only available in the credit partner training? The secret to getting it, if you buy one of my trainings recently, it's in there. It's in your student portal. Spend some time in there. There's Easter eggs, there's little golden nuggets, a lot of stuff that people don't realize they're getting for $7, well beyond the database of 446 banks. Next question comes from Ryan. Which I love this question, it gets asked a lot, so let's spend a little bit of time on it. So when should we start applying? What is our goal for personal and business credit scores before applying? I think I'll do the same kind of vibe. I'll give you a quick answer and then I'll give you a long answer. Your business credit scores are not exactly a score that you need to focus on. It's number of positive reporting trade lines that you need in your business credit profile. So in the business credit profile, you have Dun & Bradstreet, Experian, and Equifax, and you want to have at least one positive reporting trade line on all three of those bureaus. You can do that super fast using services like Nav and just get their Nav Prime account and get the Nav Prime card. If you get the Nav Prime account and the Nav Prime card, which does not require credit checks, then you can have two trade lines on all three business credit bureaus within as quickly as a matter of weeks. Doing the presidential hands now by accident. So as quickly as weeks. It'll take up to 30 days, but do it because the time's going to pass anyways. So just go get that Nav Prime account. So that answers the question for business credit scores. You need at least one trade line reporting on all three business credit bureaus before you apply for credit. And ideally, you want to have at least three or more, but the minimum was the question. So the minimum is one. So personal credit, it's not just about your score. You want to look at your oldest account. Okay, needs to be 10 years or higher. Call that number one. Number two, your highest credit limit needs to be 10K or higher. This is just in an ideal world. Doesn't have to be this perfect. Oldest account be 10 years. Highest credit limit 10K or higher. And then utilization, you get there, hang in there. Should be 25% or less. Can you guys see what I'm drawing all over the screen? Let me know in the chat. So these are the three things to focus on before you even start thinking about score. I've seen anywhere from 680 to like 730. This is like a really sweet spot. 730 or higher, obviously, is a sweet spot as far as score, but it's not just the score. Because I have a coaching client. Her score is 780, but she just got her social security number and she does not have these three things. So in reality, it's not just the score. And then you could have a 675 score and have all these three things and have an easier time to get approved than the person with the 780 that doesn't have these three things. The quickest way to get this done is through a authorized user. Now I'm just having fun. So an authorized user would be as simple as if my wife wants to go get a business line of credit with Affinity Credit Union and Key Bank in Jersey, right? Those are two backyard banks she's looking to get funding from. If I add her as an authorized user to my American Express card, which has a $0 balance and a $20,000 limit, and I've had it for a while now, for over 10 years. So I add her as an AU, I do it online, I can mail the card to me. I mean, we live together, but like hypothetically, if you are getting added as an AU, you don't need the card. You just need the trade line to show on your credit. This is what we did. So now she has a 10-year-old trade line. Highest credit limit is above $10,000, and her personal credit utilization was less than 25%. Her scores went up, and she hit all three bullet points. And she was able to get approved for any funding that she wanted, right? In her own LLC, and she's got her trade lines on there thanks to the Nav Prime account. We still do the Quill and the Uline, the Granger, and all those things too to get as many trade lines as we can. So that's a quick way to qualify. So Ryan, great question. Thicker pen would have been good. Yeah, look at that. I do a lot of hangman with the kids. That's the stick figure we usually go with. Can that be 10,000 secured credit? It can be secured, yes. It's going to be a different world when you try to do a mortgage or a loan, but for business credit cards, you would be good. Sarah asks, Question regarding AU. If I was to get added as an AU to cards before the end of August, would it reflect on September reporting with the Bureau? So great question. So it depends on when their statement closes, right? So we know Chase, my Chase card, the statement closes, it's around the 10th to 13th. I have this written down on a log, and then I know it reports 3 days later. So let's say right around the 16th. So that's how you find out. You just call the bank or look at your statement to see when it closes and when it reports. Now, there are websites that, because people say, well, like, I don't have anyone to do an AU. And I get that. You can create that person by networking and getting out of your shell or by opening your mouth at a barbecue. It's just the truth. I know we all want to be independent. Some of us are too proud. But if you're too proud to ask for help, you're just going to drown. It's not fun. So it's easier to do this with friends and family, even if it's a little awkward to bring up the conversation. But there are websites that students of mine have used with success and just bought the AU online. Do your own due diligence. Make sure this makes sense for you. But there's personaltradelines.com and there's tradelinesupply.com. And so you're looking at like $500 to $600 for 2 months worth of an AU. So yeah, someone asks, I thought banks want to see primary accounts rather than AUs. So here's the thing, and this is what the YouTube gurus will not tell you, and this is what my FICO will not tell you. And I don't know why. Like, why are you telling? I guess because it doesn't sell as well if you don't tell the whole story. So it's probably sexy to be like, AUs don't work. And I got this big thumbnail, and you're like, man, these don't work anymore. Damn. Or the new FICO scoring model doesn't consider AUs. They don't work anymore. Darn. I was watching Neil deGrasse Tyson. This is very important, what I'm about to tell you. You guys know who this gentleman is? You should look at his approach. The reason I like to listen to him talk, besides the fact that he make whatever science and all that kind of easy and fun to understand. And he's just one example of what they call the scientific approach. So I thought banks want to see primary accounts rather than AU is a great thesis, right? You can write it out on paper. Now, what steps do you have to take to prove it or disprove it? Of course, you can attend the Ask Joe call, and of course, you're going to get my opinion. But I always tell people, you don't have to listen to my opinion. You don't have to listen to the guy on YouTube's opinion. You can figure it out yourself. And then you'll become a believer, and then you come back and be like, Joe was telling the truth. And that's what I did, right? I thought banks would not lend to my brand new business with no revenue. But then I found hundreds of them that do. Even though 4,000 of them don't, hundreds of them do. And if I'm only looking for what, 1 million, 500,000, 100K in credit, I only need a few banks, a handful. 5 or 6 out of those 100. So I called every single bank in New Jersey, and I found out which ones offer their own business credit cards. I found out which ones are portfolio lenders. I did my own research, like Neil would tell me to do. And then I peer reviewed it in the sense that I had 2 other employees. We had to do 3 checks. That was our rule. So everything one person found, it had to be verified 2 more times by 2 other people. And we hired them on Upwork.com. Americans, America. So we verify the information, and there are banks that allow you to project your revenue. There are banks that are startup friendly. There are banks that don't even care if you just created the LLC that morning. You're still getting $25,000 of business credit if you follow the steps I outlined in the program. Bring that to AUs. When I reach out, this is about 225 banks. From that, about 20 of them were cool portfolio lenders, the top SBA lenders I showed you earlier in this call. From that, 5 or 6 of them I became friends with by going to all the networking events that they do, going to SBA events, inviting them to the real estate investment club that like David has been to, for example, who's one of our members here today with us, and going out to coffee with them, drinks, whatever they're doing, right? So I can ask them that question. That's one way to verify information. You can also just simply do the application, and that's what I've done with thousands of students. So here's the big thing that you're not being told on the YouTube gurus TikToks page, right? About AUs, and this is what you're not finding on the web forums, is that if you're applying for a mortgage with a real underwriter looking at that, yes, are not as preferential to primary accounts. But if you're getting a business line of credit or business credit card, you're good. That's the answer. And we found that out 2 ways: by talking to lots of different banks that we first developed a lot of rapport with, became friends with them, got them off the script, got them out of the suit and tie and into a t-shirt, and then you can have real open dialogue with them. And if you're not doing that, you're missing out on the ability to get all these things that you want. You have to develop rapport with your bankers so that you can ask them some tough questions. If you open your phone call with it, then they're going to be like worry. They're gonna be hanging up on you and thinking you're a scammer. I just showed you an example with my wife getting approved from KeyBank and Affinity Federal Credit Union just using the AU technique. So does the AU technique work? It works great. It still works. It'll always work. And people always come up with content to I don't know, to trick you to watching their YouTube videos. And that'll always be a thing too. So anyways, that's why I'm telling you with the whole Neil deGrasse Tyson concept, and just verify this on your own. David says, would you ever sell AUs on your cards? I don't know, man. A lot of people ask me that. I could make a lot of money on it, and I don't know the answer. I did do some research, and do you know that authorized users are protected by certain laws? We probably have to use ChatGPT or Google. And that was shared on a major bank website. I just Googled authorized user law about your protection allowing you to use AUs, whether you're receiving it or providing it. So just know that there is language. That's why I love being an American. We're allowed to be creative. I mean, that's what we were, right? We were creative people that created our own country. And then we kind of overdid it with all these rules and regulations, but some of it's good, you know. I probably belong in a different like world, like I'm more cowboyish. Like integrity is important, but also like not having a government put their thumb. More of that like freedom type of vibe. So anyways, there are laws that protect you in your ability to use authorized users and receive authorized users. And you could do some research on that. I mean, it's your life. I didn't get a head start. I didn't get $1 million loan from my dad. I mean, come on. We didn't have any money growing up. Why do you think I used business credit in the first place? How else can you go from food stamps to millionaire status? It's business credit and real estate. That's the only way I knew. Alex says, I'm a non-US resident, currently not living in the US, but I have an ITIN. I'm looking to build my US credit. Speaking of cowboys living in the West, right? It's very hard. It's not impossible. Now, can you boost up your business credit score without being a U.S. citizen? Yeah, you can. You know, you got the ITIN, you can get the TIN number and all this stuff. But there's a certain point where you're trying to get the checking account where it's going to become really complicated. It's not impossible, though. I have students that have done it that are from other countries. But I will say there's a student of mine, an active coaching student of mine, who joined me before she got her social. Now she's still with me in the coaching program after she got her social, right? So this is kind of the same story, non-US resident. And the easiest time that she had getting business and personal checking accounts set up was with local banks through conversations, not bankofamerica.com online application, right? The local one branch bank that makes their own rules. That's the bank you want to work with and build rapport with the relationship manager, with the vice president. And you're going to have to do it in person. So you don't have to fly out here. I doubt you're going to get this done on the phone. So that's the answer. And the funny part is that's the same answer for getting business lines of credit and business credit cards and doing all the cash out refis and doing the BRRRR method, all these real estate loans that I got, was finding the small bank that's a backyard bank that lends their own money, and then finding the person to charge that and becoming as friendly as I can with them, right? Professional rapport, and then asking them how things work and then making my application. Another question came in from Bob. Last year, I opened an LLC with the idea of establishing a virtual real estate wholesale business. I have done no business yet. My personal credit is below 600, been rejected 5 times for business credit. What do? I desperately need help. Okay, so the answer is watch the beginning of this video on the credit partner. You're going to have to do something that creates value for someone else that has what you want, great credit, and then you have what they want, which is wholesaling houses. And you might have to give them, I mean, if they become your partner, you're gonna have to partner up with them. So maybe you take a percentage of your revenue from wholesaling houses and it goes towards the business. And then with this pile, half goes to you, half goes to them, or whatever you guys work out. It doesn't have to be 50-50, it could be whatever. But that would be the short answer. The longer answer would be like credit rebuilding, credit improvement, improve your utilization, like the thing I was drawing all over the screen. That it would be how you'd get your score from below 600 to above 600, adding trade lines and things like that. I know the credit partner route sounds overwhelmingly hard for people, but it's worth it. It's risky, but for me, it was worth it. What's the alternative, right? Just being at home all day, being pissed off because life sucks and you can't figure anything out. I mean, you might as well come down swinging, right? You might as well go down swinging. It's worth a shot. I've done it, and a lot of my students have done it. So it can be done. We've already proven it can be done. It's up to your grit. A couple questions came in for the chat. Do you have any group of homes or any sorts that have been very profitable to you? Yeah, man, every BRRRR deal I ever did, because the flips were fine. You know, flipping property is good for cash, but it's not good for net worth, and it's you're only as rich as your last deal. So the thing about the BRRRR method bring that up on the screen, give you guys a link to it. The BRRRR method is the idea of buying a house, a property, 2-family, 3-family. Those are the ones that work best for me. Buying it, renovating it, renting it out, refinancing it, repeating the process. So it's great to buy probate deals. A lot of them are, this is just what's happening. Okay. There's the baby boomers, the largest population in our country, and a lot of them they don't need the big house anymore. You know, they're moving to smaller houses. Many of them, of course, are going to nursing homes. Obviously, a lot of them passing away. That's a big generational transfer of wealth that's happening. So you can buy probate leads. And the biggest 2 deals I've ever done in my life were both probate deals, because the people that inherit the house, the kids, don't live there. They got their own families, their own houses. They don't want to fix up the house. They just want to sell it, right? So they could sell it with a realtor, and they could fix it up, and they could start doing the showings and all this. They got to go get the C of O, and they got to drive out to the house, and all this pain in the butt stuff. And that's fine. I mean, if you want to sell for top dollar, put in some equity, paint it, make it real nice, update it. But there's a percentage, just like my brisket example, just like my bank example, is 10, 20% of people that say, Joe, just give me cash as is, give me my check in 2 weeks, deal with the probate process, and I don't even want, just give me my check. I'm not even going to meet you at the house. Find your own way in. So that is one way to buy houses that works very well nowadays, is marketing to probate. And you could use, I've used US probate leads as a lead source, but any source that's manually going to the court and grabbing the data, as opposed to like reselling it 40 times and that's like dirty leads. So don't do that. Do something that's direct. If you go over budget on the renovate, which is number 2 on the list, and it's a fix and flip, I've lost a lot of money on fix and flips. But if I just held the house, I would have made $300,000, $400,000, $500,000, right? My best deal is a BRRRR deal. I bought it in 2013 for under 300K, Newark. And it's a whole nother class of how I got the deal, but I just shared with you one technique I had to get deals. Did a lot of networking, saw a lot of houses, and I bought this house under 300,000. No money out of pocket, of course. I used business credit for down payment and a hard money lender for the purchase. Once we fixed up the house and rented it out, the property, it's a 1, 2, 3, 4, 5, it's a 6-unit property. We refied out of it with a local bank, a local community bank. I think it's Spencer Savings Bank or some 1 or 2 branch bank up here in Jersey. The whole process that I teach is exactly what I practice. So now I bought it with business credit and hard money. I refinanced the deal, and that's step 4. And I got all the money back. So now I pay off the business credit, I pay off the hard money, and you could put some money in your pocket, like pay yourself 10, 20, 30, whatever it is, $1,000. It's your decision if you want to do that. Now the house is worth, I think, $1,050,000, so almost 1.1 million. And obviously, I mean, I've held it 12 years. Best deals that I've done are BRRRR method deals, and that is how I became a millionaire, from a guy that was making $35,000 a year and working a 9 to 5 with no college degree. That's how I did it. So I'd finish my job, and then on my little flip phone, I'd start calling sellers, and I would ask them questions. Tell me about your house. Tell me about your situation. That sounds great. When can we meet? What's the best you would take if I could pay all cash and do a quick closing? That over and over and over and over again until I had enough money to leave my 9 to 5. So thanks to business credit, I was able to quit my job, and also thanks to business credit, I was able to kind of change my whole life. That's why I'm still passionate about it this many years later. So if I went over budget by 50 grand or 100 grand, would it really matter? No, because I have $700,000 in equity, right? But if I'm flipping the house and I go over budget by 100 grand, then I'm screwed, right? But the pros outweigh the cons. So yeah, those are the types of deals that are most profitable. To me, is the BRRRR method. Low and slow, another brisket analogy. So you ain't making a lot of money up front, but you got $1 million coming to you in 10 years. And that's a beautiful thing. And you can do a cash out refi and put some money in your pocket so you could eat that year too. If you do 4 of them, you pull 30,000 from each, you can make 120 grand. It's not even actually income because it's technically debt, right? And still have, like in this case, we would never take more than, if the property was worth $600,000 and we're getting 75% loan to value. So I'm taking out a loan for 450 on a $600,000 asset. The 450 is enough to take care of the 300 that I told you I paid for it. Takes care of me getting a little food on my plate. Takes care of the interest payments on the debt and any partner payments or hard money lender. And now everyone wants to lend to me again because like, oh, that was well done. Now there are cases. So I did 14 of these deals in Newark, and there were cases where 2 or 3 of them, we were upside down in the sense that, like, not upside down, but we didn't get all our money back. But all we had to do was wait a few years, which is easier said than done, but it balanced out. I have an ITIN, also no social. Yeah, I struggle to monitor my personal credit. So what my student did that was in that situation is she became an AU on different cards, got secured cards, and was able to finally open an account with some of the credit bureau websites. So couldn't get the MyFICO account, but was able to get like either the transunion.com or Experian.com or Equifax.com. I have a question here that came in from Irene and says, I'm debating on assisting seniors with locating retirement housing for them to relocate. See, again, good niche. This is a big need. When they can no longer handle the responsibility of owning a home and then possibly having the opportunity to assist them with the sale of the property. I have a friend that does this. What would you advise in regards to this business strategy when talking with banks regarding funding applications? I would just share it in the way that you shared it. If we did 4 deals the first year, what would our income look like? The answer is just to be open and honest. But before I get too honest, just like dating, don't give it all away on the first date. Work your way up to it, right? So let the crazy out a little bit at a time. Don't tell your whole story to the banker the first day you meet them. Establish a relationship with them, then you could share it in even more detail. Before I meet with the bank, I've talked to them on the phone 2 to 3 times already. All right, thank you everyone. Bye for now.